Hello and welcome to another update video about Solana. So on the Solana chart, we've got two main wave counts we are covering. I wanted to start by looking at both of them here on the daily time frame to first of all get everybody to understand the different scenarios we're tracking. They are both short-term bullish, but one could lead to a bearish outcome overall, okay? The white wave count is essentially more bullish and should go higher than yellow. The yellow wave count is possibly keeping the door open for completely new bear market lows. So it is important that despite all the hype, despite all the green candles, we love them all, that there is still the potential for a new bear market low. I'm not trying to predict anything here, you know, this is not what it's really about. It's about highlighting the risk and highlighting good entry points and reward to risk setups and highlighting the levels to watch on the different time frames, you know, target levels and so on. That's what it's about. I don't know if the price will come down to make a new bear market low, right? That's leave that to people on crypto Twitter. This here is a technical analysis which tells us definitely when the trend is very likely to change. It gives us very clear levels, invalidation points and so on that can be used for trading. It also helps us understand what are the levels that need to break for the trend to move down, and what other levels that need to hold so that we can follow the trend to the upside. So basically we like to follow trends. Elliott wave shines when it's coming to trend following, okay? Over recent weeks with Solana, I gave you constantly support levels to watch. And against these levels, I highlighted we can focus on higher. And it kept going, kept going, kept going. These levels never broke because they are typically far away, or let's say far enough away in order to withstand the volatility in the crypto space. And they can still guide us higher when the trend is up. So that's very important. Typically, we use the 50% retracement level for that in a third wave rally, which this one was. Even though it's not a guarantee, it's a really good guideline, okay, that 50% fib level. If in any third wave the 50% fib level breaks, it's a good indication that something different is going on. So the yellow wave count anyway, it suggests that the price topped in an A wave here in January. The price moved down in a corrective B wave and we're now in this C wave. This is a 5-wave move. 1, 2, 3. The third wave could be finished. We're going to take a look at that in a minute. Then we should get a wave 4 and a wave 5. And that seems to be an ending diagonal, that C wave. So we have overlapping price action. It's not impulsive, even though it looks impulsive, but that's sort of what I'm watching for, okay? And in this scenario, the move down into the December lows was just an A wave. The move up is a B wave, and we have a good chance to still see new bear market lows in a C wave, possibly even around $5. I know it sounds ridiculous right now, but you would be surprised how quickly sentiment can shift in crypto. Now, again, I'm not telling you that it's definitely what's going to happen. We will monitor always for more bullish options as well, and I will always give you bullish continuation support. But if that breaks, it just shows you a lot about the risk on this chart. Now, there is another wave count which should go higher and is actually more bullish than the yellow count. In this count, that's the white wave count, we suggest that a wave 2 bottomed in December. This was a 1-2 setup. We're now moving up in a third wave. There will be a fourth and a fifth. That third wave should go higher than the white wave count overall should go higher than the yellow wave count. But it isn't respecting it very well. And that's the main problem, okay? It's not respecting that wave count very well. And therefore, I have it sort of in the back pocket here. We're observing it in the background, but the yellow wave count at the moment is in control. Should the price start to respect the white wave count a little better, we can make that the primary count. For now, it's the yellow count, which also short-term is bullish. Now let's zoom in, take a look at the movement. Obviously, we're now looking into the area after the B wave low that was made in June. So the C wave, 1, 2, 3, 4, 5 would complete a C wave of a larger B wave. And in this C wave, we are looking at the third wave. So basically the heart of that rally, okay? Now in the third wave, because we're dealing here with a diagonal pattern, we have an ABC structure. A wave up, B wave down, and the C wave is likely complete. It can still extend higher, yeah, as long as the $38.30 level is holding. So that's what you need to consider. There is definitely the potential for it to push higher. If it does, $55 will be the next target, and then maybe even 63 still within this third wave. If it goes to 79, that's also possible, but that would be quite extended for a third wave. At the moment, the third wave has really only done, let's say, the minimum it should do. The 1-to-1 ratio was reached. So I would not be surprised if we get an extension here, but for now it has a bit of a breather. It takes a breather, okay, and is respecting our resistance as well. Now, it's possible that we extend as long as we're holding micro support at $38.30. If the price breaks below $38.30, then I think we have confirmation that we are already in the fourth wave with support between $28.40 and $37. With a key support, and I think that's the most likely support level, around $32, sort of in that range approximately, right? Prices are too dynamic to really give you a very, very clear level. Often it works, with FIBs, but sometimes it might end a little bit higher than that, That's why we give ranges. Also, to keep the to keep the wave 4, to keep the idea that the wave 4 might have started alive, the price should not break above $44.77. So we're very open to an extension here, but I would need to see evidence by the price breaking above $44.77. Then we will have structural resistance around $48.30, which is basically here the previous swing high that was made in August, and then the next Fibonacci extension. So either we get there now or after a deeper pullback in wave 4, which it might take some time to do it, and then to extend further higher. Yesterday we looked at the daily RSI, and the daily RSI is pretty much overbought, which is typically a sign for a third wave. So it makes sense to still assume we are in a third wave. Normally towards the end of a third wave, we start to see bearish divergences. To be honest, I'm not seeing those yet. I mean, you could argue here on the 4-hour chart we start to see them. I don't see them on the daily time frame yet. So often you see the highest reading in a third of a third wave, which was here and here. Yeah, but it's more here. It's the third of a third wave. Internally, it's the highest reading. And then we start to see a bearish divergence in the fifth wave of a third. Now on the 4-hour chart, we see that not yet on the daily time frame, which might only show when we move into this fifth wave higher. Yeah, that's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on Instagram and Twitter. There's additional content there every single day. And yeah, as a channel member, you get access to a weekly member live stream. We've got the next one today at 5 p.m. UTC. We will cover the topic of how to identify coins that might outperform Bitcoin, Ethereum. You also get access to Discord and Telegram, educational content, and also to signals and, well, short-term market updates for gold members. Thanks a lot for watching. Bye-bye.